The UK government last week launched an inquiry into corporate governance at UK PLCs. Today, here with me to discuss is Janet Williamson, Senior Policy Officer at the TUC. Do you think that shareholders have fallen down on the job, or do you think they're engaging more with companies even when they don't see a problem?
I don't think the Stewardship Code has had a very dramatic impact.
Okay.
I think that shareholders that were already doing quite a bit of engagement have continued to do that. It's not made a lot of difference to them. And I'm not particularly aware that it's really, if you like, pulled up laggards who are not adopting that approach. So I don't think it's made as much difference as, we would all have sort of hoped that it might do. And it's a genuinely it's a difficult area. You can't force engagement very easily. In the UK now, the majority of company shares are held by overseas investors. Yeah. And I think that can create some barriers to investment. A lot of to engagement. Yeah. Engagement clearly does go on overseas, but I think less than goes on within a national context, whether that's barriers of sort of. So I think that's one factor that does have an impact on companies here. The fact that the majority of their shares are held overseas. Yes, what it would take, I think, to make shareholders have a longer-term perspective, I think, is a difficult and open question. One thing that we advocate is that corporate governance rights, so rights to voice, rights to engagement, rights to voting, should be dependent upon a minimum period of shareholding, which we suggest, should be 2 years, but you could debate the length of time. And the aim of that measure would be to sort of, in a way, take the role of very short-term shareholders out of corporate governance. Of course, they have the right to buy and sell shares, and to gain from the proceeds. That's the economic rights that go with it. But the corporate governance rights, we believe, should be limited to longer-term shareholders, because it's when you look at the long term that you get a convergence between the interests of shareholders, other stakeholders, but most importantly, the company itself. Short-term shareholders don't necessarily have the same interests as the company. And that's a problem. If you're giving those shareholders voice and voting rights and engagement rights, that is a problem.
Do you think activist investing in Europe will help with these long-term shareholders to engage more with companies if they feel that their holdings will become a target?
What do you mean by activist investing?
So activist hedge funds going after companies that they think there's an issue.
Yes, yes and no, I suppose. Sometimes they can play a useful role in kind of forcing an issue to the fore, and often they will buy up enough stock to kind of really make their voice known. Even putting people on the board at times. Sometimes that seems to be justified and beneficial to other shareholders and also other company stakeholders. At other times, it does seem as though activist investors can almost try to hijack a company for their own particular, interests or point of view, and it doesn't seem to be in the long-term interests of other stakeholders, other shareholders, and indeed, the long-term interests of the company in terms of building economic value. So they have a role. They certainly have a role to play, but I wouldn't see it as always being a positive one. I think they have a mixed record.
Great. Well, thank you very much, Janet.
Thank you.